Welcome to Fraud Friday. I'm Bob Coleman. We're talking loan fraud, bankers, public officials, and borrowers who got caught. Today, Ronnie Atkinson of Gray, Georgia, got himself in trouble. He got indicted for loan fraud and identity theft. Here's the deal. He had a banking relationship with Morris Bank. The market president had a $500,000 loan limit, which means he could sign off on any loan request up to $500,000. Ronnie befriended him, and we're talking 2019. He got a series of equipment purchases. One of them was a Tiger Cat. I don't know what a Tiger Cat was, but it's a mean-looking machine that harvests timber. That particular transaction, Ronnie said was going to cost, that machinery was going to cost $135,000. Well, it only cost $70,000, but he took that $135,000 check, gave it to the vendor who took it to a check cashing service, if you can believe that, got $135,000 cash, kept his $70,000 for the sale of the Tiger Cat, and gave Ronnie a kickback of $65,000. All sorts of problems with that transaction. Number one, and what he got indicted for, is he lied to the bank about the value of that collateral. And also, when you're talking about over $10,000 in cash, there's all sorts of red flags that occur. But and also the bank should have known that check was being cashed. Anyway, so he quickly ran up his $500,000 and bumped up to that limit. The banker, who we only know as AC in the indictment, then proceeded to say, hey, I know a workaround. Bring in some of your friends, bring in some of your family, bring in some of your employees, and I'll cut them a check. They can go down to the check cashing service. I believe it was KC's check cashing service, Kevin's cashing service. And you can get the money and I'll make the loan to those people, but not to you. So we have a banker who got a little bit too chummy with his borrower and wanted to please. Now, the banker exceeding his loan authority, that is not a crime. However, the banker lying on the applications or lying and misrepresenting the bank, that's a gray area. The banker has not been indicted. We don't know his name. We just know that he was the market president. The bank got wind of this. They went in, by the way, and they saw a suspicion of what was happening, and they slapped what they call a substandard category on the loan. And what that means is when the banks evaluate their loan portfolio, if they classify something as substandard, they believe they're going to be taking a loss on a portion of the loan. Now, as I said, the bank thought they were collateralized with this nice piece of equipment, which, by the way, that equipment holds its value very nicely. But instead of being a fully secured $70,000 loan, now it's a partially secured, i.e. really an unsecured loan. So this was his shenanigans. And where Ronnie got himself in trouble was in two issues. He lied to the bank about the value, and that's a crime. I mean, the bankers almost have the same protection as an FBI agent. If you lie to a bank, and it's very simple, next time you take out a car loan, which, by the way, I took out a car loan, I signed, 30 pages worth of papers, or a mortgage loan, California, a trustee loan. And there's all sorts of representations that you are not lying to them. And there's very stiff penalties. Lying to the bank carries up to a 30-year sentence. No one gets that. It's depending on the amount of the fraud. In this case, the aggregate was $3 million, which is pretty hefty. And if it goes to sentencing, they will look at the actual loss. So Mr. Atkinson, obviously a small business person. Now, if he got the loan on an unsecured basis, he would not have been in this problem. But he was, here I'm speculating, but as some small businesses or a lot of small businesses do, they just don't simply have the cash reserve, and he needed to get his hands on some money, and he found that this was the way to do that. The takeaway on this is that number of takeaways. Number one, I'm always intrigued by bankers who want to please the customer. And there is no allegation of a bribery. If it was, it would have been in the indictment. So The market president is not being accused of that. If it was, he would have been indicted as well. It was simply a, hey, we have a situation where we have friends and we want to please the customer, and the customer took advantage of that relationship, and they did some shenanigans to work around the system. And when it comes down to it, you always have to look at the spirit of the law, the spirit of the regulation. And when you're taking checks and you're cashing them at the local, actually I think it was out of town, but you're cashing it at the check cashing store, I think that is definitely a red flag. When you're asking employees to cash checks and they're kicking money back to you, those are red flags. When you're asking family to do things, there are all sorts of red flags that in the small business person's mind say, I just need to get the cash and I'll do whatever I have to do to make it work. But unfortunately for Mr. Atkinson, he's facing some very serious charges, and we will see how it all turns out. Hey, thank you for joining me today for Fraud Fridays so you can stop criminals from stealing from you.